This is the real stuff. This is the part that you need to figure out. How do you trust that the market will go higher or lower? I can't tell you an everyday solution that you're going to trust, because sometimes I'll go into the marketplace and my bias may shift because the market will do something that I didn't want to see it do. And because I have experience in the navigational skills to work within that, the time that it takes me to change my mind, I don't have time to sit down and explain to you what just took place in the chart that make me change my mind, because I'm looking at a 1 minute chart and sometimes less. But remove all that and think about what I teach you on the market reviews and commentaries on the euro dollar. What were we aiming for? That old daily low. That's not support resistance. That's fucking liquidity. We were aiming for a move below the low. That's not support. Okay. We want to see it go down through it. We're targeting to it and through it. That is not fucking support resistance. We're going in with the idea that the market's going to draw towards those actual orders that will be resting below an old low or above an old high if we're bullish. And you stick with that idea until proven clearly that you're wrong. And that same approach, you use it to every time frame. And for my son, I told him, I said, it'll be easier for you. Not perfect. It doesn't mean it's going to be flawless. You're going to lose. He will lose eventually. It will happen. He will have a losing day that causes him to have to sit still. Will that mean the model is broken? No. Some of you are just waiting for that to happen. Some of you are dying for that to happen. I'm not impatient about it. I know it's going to eventually materialize. But he stops. If he follows the rules, he stops. And then he'll think about and have to entertain the idea of what it feels like being in that negative day. But guess what he has? He has the experience of having done it now 6 days correctly and making over $200. That same $200, that's minuscule. Let me rephrase that. Okay. I'm talking as an American here. Okay. For folks that don't make that much money in the country that you're from, please do not be offended by what I just said. I'm not trying to say anything to make you feel uncomfortable or be condescending. But in America, $200 is not a lot of money. I mean, frankly, if you go to the grocery store, you can't even put a quarter of grocery carts worth of things in here and not at least be at $200 in grocery costs now. It's ridiculous. But in terms of monetary, money, $200 is an insignificant amount of money. But in the hands of an 18-year-old that doesn't have a home or a car payment, all these extra things, or a child to take care of, thank God, that's significant. And he outpaced his new job that he just started Monday as an HVAC tech apprentice. He's trying to be a heating and air conditioning kind of guy. He wants to start his own business eventually doing that. That's wonderful. He outpaced both of his previous job, working in a coffee shop, and he outpaced the income with overtime at $16 an hour, which is where he's working for 90 days. And after that, he goes up to $19 an hour. He did more in 6 days using this model that's not even complete because it's a graduated model. What does that mean? What does that mean? If that hourly or 15-minute time frame draw on liquidity amounts, you think that the market's going to go higher or lower to that specific liquidity, then the only thing you're waiting for, if you're bearish, and I'll give you the example for being bearish, on the 5-minute or 1 minute, there has to be some short-term high traded above. Even in a run while the market's been going down, don't think model 2022. That's not what this is. Okay, it's not that. He can take a trade with that model within that context of the market reversing. We don't need that. The market can be going down for the entirety of the day. If it hasn't traded to that 15-minute or hourly sell side liquidity pool, it's not done. His model says aim in that direction. If it's 50 handles to get to that low, doesn't matter. He's not holding for them 50 handles. He's trying to get 10. But why would he do that, ICT? He's supposed to be your son. Why would you tell him to do that? Because he's a fucking human being, just like you are. Why aren't you making money with everything I've already taught? Why aren't you out there passing combines? Why aren't you getting taking withdrawals from your Express accounts? Why aren't you doing that? Because other people are doing it. So stop putting fucking stupidity in the conversation. He has to learn, just like I had to learn. Every one of us has to go through that process. Learning how to do this takes time. It takes a lot of effort, and you have to wade through a lot of bullshit that you bring to it yourself. You do. He's brought it to himself. He has now scar tissue, trying to do it faster, trying to do it outside the rules I laid down from the first time. He blew his combine accounts. He's done it. He's done that damage. So now he has to go through what? The growing pains. And small little incremental wins and successes help mend that. Doesn't completely wipe it away, but it helps restore at least the proper mindset, and it encourages you. How many of you would have been encouraged if you would have made over $1,600 in 1 week? Trading a very small number of contracts. He did one trade that I'm aware of that he did 2 contracts on, but every other trade has been 1 contract of a mini, not a micro. He was adamant he doesn't want to do the micro. He goes, I want to do this, Dad. I want to make the $20 per point. I don't want to trade the $50 per point ES, because he thought that ES, the $50 would be more scarier. It's not. It's actually a smoother, slower delivery. I wanted him to be an ES, but I allowed him, like I allow you as your mentor, to bring his own personality into it, because you can't press everyone, even my son. You can't press everyone into a mold and make everybody come out like a cookie cutter result. It doesn't work that way, folks. It does not work that way. And if you believe these pieces of shit online that tell you that they can take everybody and turn them into the same thing, like a robot, repeating over and over again, same bullshit, their results don't speak that. They don't even have profitable students that are consistently making money. I had students leave my stuff, go somewhere else in clownery, make all kinds of videos, say they're going to do we're making so much money now. And they deleted everything because they've shit the bed. You can talk the game. You can talk all that shit. In the beginning, you're going to talk all that shit. I'm going to make a lot of money with ICT's concepts. I'm going to quit my job at this date. And then when you start trying to learn it, it's like, oh shit, what's going on here? You're rushing it. You're trying to burn those candlesticks too fast. And you're counting the grains of sand, thinking you're running out of time. You have to learn it by this time, or else. You're trying to master it. You won't master it. You're never going to master the market. You're never going to. I'm not a master of the market. I'll say that again. I am not a master of the market. I can only master myself periodically, because sometimes the human element in me creeps in. I'll be mad. I'll be discouraged about something that's going on in my personal life. I'll be distracted. I won't be in front of my charts when I should have been. I look at moves and I think to myself, okay, it would have been great to be in that. I'm not beating myself up about it, but I'm recognizing that. That's a character flaw. I'm human. You're going to have all those same things, but here's the worst part about it all for you. You don't know how to make money yet, but you feel rushed to do it. You got to keep up with the Joneses. You got to do everything else. And that's what my son wanted to do. Right away, you want to jump out there and be ICT Junior. Show the trolls what's what. And found out that it's not easy being me. It's not easy just going out there and taking some videos, taking some logic, just heard from the lips of a man that's been doing it for 30 years, and thinking that you can just walk out there and do the same thing. It doesn't work like that. It's harder. But he has to take that 15-minute or 60-minute chart and derive a draw on liquidity where he thinks the market's going to draw to. And as long as it hasn't traded down to it, if it trades to it one time, he's done. He can't use it. He can't use that framework. He has to wait another day or trade something else or wait till the afternoon. So he doesn't have a specific time. Like, he's not always operating in 10 o'clock till 11 o'clock. He'll trade when he sees that liquidity is presently a draw. And if he wants to be in front of the charts, 30 seconds allows him to take that 10 handle run. 30-second chart is doing 10 handles all over the place inside of 1 hour, which is why I've always laughed at these fucking clowns. Like, I could do their whole fucking month. Their whole month. I can make their whole fucking month with a real money account. I could do that in 60 fucking minutes. I will lap their ass. That's why they talk bullshit. They ain't done shit but talk shit. But you don't need to have your take profit or your draw on liquidity reach to for the model to work. You need to have an understanding of where the market is likely to reach to. Let me think of it like this. You're in a trade. You've been in a trade. You've taken a trade. You tried to do a combine. You did it with real money account, or you did it with demo. And you put the trade on, and you know you don't want to see it go to a specific price point. It may not be a stop loss that you actually put in there because you're afraid to put a stop loss in, because that confirms and solidifies you were wrong. Instead of saying, this is where I'm wrong and I don't want to lose any more than this. That's the proper mindset about using a stop loss, because you want to be right. You can't accept the fact that you're potentially wrong. If I was 100% accurate all the time, every single time, and I knew there was no chance for any manual intervention to ever step in there, I would never use a stop loss. Why would I need one? I'd be right all the time, right? But having a stop loss is a testimony to you respecting the risk, which is required. In the beginning, you don't respect the risk. You concern yourself with the risk of being right or wrong. That's the limitations that you place on yourself in terms of mitigating anything in terms of risk. The risk of you taking a loss for the sake of doing it wrong, not for the basis of you only took this much as a loss in monetary sense. And there's a paradigm shift that has to take place. And I'm teaching him how to do it the only way I know how to teach it. Whereas you have to frame a 15-minute or a 60-minute draw on liquidity, where the market's likely to go. And then on a 1-minute or 5-minute chart, if you're bearish, there has to be some run above a 5-minute swing high, even while it's been going down. It has to go up above it and start trading lower again. And then once it does that, you can drop down into a 30-second chart and take a 30-second fair value gap. Because the damage has been done on the 5-minute chart. It could have been a stop run on a swing high in a 1-minute chart. See, that's what a high frequency trading algorithm is doing. So you don't fucking know that, because these clowns out there talking about algorithms, these wannabe quants. You might talk about all kinds of shit and call things quant. You may say your shit's algorithmic, but it's retail. But every fucking high frequency trading algorithm, every single one of them, has to have a disruption in order flow before they will institute a new order. That means they cannot go short until it goes up. It has to go up. Why do you think I taught you discount premium? Because I am algorithmic. Enigma is fucking talking to you. It's not a yin and yang fucking symbol on some bullshit. The market has to go up, purge some measure of liquidity. If the market does, I don't give a fuck what market it is. But if you're bearish and on a 5-minute or 1-minute chart, if a swing high, a short-term swing high on that 5 or 1-minute chart is taken out by one tick and it trades lower, as soon as it trades lower, on what time frame are you talking about? Whatever time frame that liquidity was taken on. If you see the swing high on the 5-minute chart has been pierced by one tick, is all it takes. It doesn't need to fucking close above it. It doesn't need to have a certain measure of handles above it. One tick. Once it does that, that's a disruption. That's a disruption in order flow. That's it. That starts the sell program. Then on a lower time frame, It can be a 5 fucking second chart. It could be a 1 second chart. Okay. It doesn't matter. But I gave him a 30-second chart because it's easy to get in there and take a fair value gap after that disruption and order flow, knowing that the market will gravitate towards that liquidity. We need not see it trade to it. Now, some of you that are familiar with watching lower time frames and have been with me for a while, your fucking gears are turning right now. You're like, holy shit, I can see this, and I'm not even looking at the fucking chart. I can understand exactly what he's saying right now. Your juices are flowing on. Yes, 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 yes. It's there every day, every hour, every 15 fucking minutes. It's there. So forget the 90-second or 90-minute fucking bullshit. It's every 15 minutes. It's there. I literally could sit there all day long, trade just intraday volatility, just doing what I just told you, and mop the fucking floor with all these fucking people out there talking shit, selling shit, robots and stuff. It's dumb. It's dumb. You don't need all that stuff. As soon as you take the very first fair value gap on the 30-second chart after that 1 minute or 5 minute disruption in order flow, that stop run, and that time frame starts to trade lower, the very next candle, when it starts to trade down, okay, you drop down to the 30-second chart and you wait for that little 30-second retracement, because it's going to happen. And you look and see where your 10 handles would be. Place your limit order. Put your stop loss in. He risks 12 handles. He's willing to take 12 handles as a hit to take 10 out. What the fuck did he just say? He just said he's using a negative R. Yes, because your reward to risk model bullshit is a myth. It's a fucking myth. You don't even trade with it. You want to talk about it when you sell your courses, and these people write these fucking books, but they're not trading with these fucking things in mind. Every person that's ever come out there and said that shit, give it enough time, they eventually come clean and say, well, you know, it's theoretical that if you did this, you can get 20 to 1. It's theoretical you can get 200 to 1, but they haven't really done it themselves. But hey, theory sells, right? You don't need to have a fucking 3 to 1, a 2 to 1, or a 1 to 1. If you have a high strike rate, what's a high strike rate? What I just told you. How many times do I tell you something before it happens and it happens? It's real logic. Nobody gets lucky like this, folks. That doesn't happen. Luck doesn't exist here. It's statistical probabilities rooted in real algorithmic price delivery, not retail logic trying to decipher something that has absolutely no basis on harmonic animal patterns. Elliott wave horse shit, supply and demand horse shit. It has nothing to do with it. It has nothing to do with it. This stuff is predetermined. It's running on a script, period. That's all it's doing. It's time-based. And you're complicating it, worrying about dumb shit. Oh, it's dropped down. I can't sell short down here. It's been going down. Why the fuck not? It's going somewhere. It's going down to Southtown, okay? Below the old low, below the relative equal lows. It's got something down there it wants to visit. It's warmer in the south. It wants to get down there. It needs some sun.